Hello, and welcome to today's webinar titled The AML Act and AML Model Risk Management. The AML Act of 2020 is the most significant anti-money laundering legislation since the USA Patriot Act was enacted nearly 20 years ago. It contains important provisions that are designed to make the Bank Secrecy Act regime more risk-focused, and the AML Act of 2020 represents an update to the BSA framework, which dates back to the 1970s. My name is Daniel Polar, and I'll be moderating today's panel discussion. I'm the Director of North American Financial Crime Compliance at LexisNexis Risk Solutions, where I've been for the past 16 years. I spent more than a decade in banking before joining LexisNexis. I'm pleased to be joined by two leading industry experts. First, Cameron Jones. Cam is a Director of Risk Consulting at RSM US. His impressive background includes working with financial services, government, and law enforcement, as well as financial crime software and analytics organizations with a focus on BSA, AML, fraud, and intelligent automation. Cam is joined by Dan Soto. Dan is the Chief Compliance Officer at Ally Financial. In his role, Dan is responsible for leading the company's compliance efforts in line with applicable laws, rules, and the company's regulatory policies. Dan joined Ally as an Executive Compliance Director in 2009. Before joining Ally, Dan held several compliance leadership roles within the financial services industry, including positions at Wachovia Bank, Royal Bank of Canada, and Bank of America. Dan also served for over 15 years as a bank examiner with the FDIC and the Board of Governors of the Federal Reserve System. And due to some unforeseen circumstances, my colleague Chris Siddons will be unable to attend today's event. We have a lot of great information to share with you, and we'd like to make today's event more of a fireside chat with Cam and Dan. Throughout the presentation, we encourage you to submit questions in the Q&A chat box. We will do our best to answer as many questions as we can. Also, throughout today's presentation, a few poll questions will appear on your screen. We encourage you to respond to them as they provide us with valuable industry insights. And from a logistics perspective, the webinar slides are available in the resources section on your console and are available for download. And a recording of the webinar will be sent to everyone who registered to attend. And with that, let's move on to Section 6209 of the AML Act of 2020, which covers model risk management. Part of Section 6209 of the AML Act deals with FinCEN issuing a rule which will specify the standards related to technology and internal processes, which we've outlined on this slide. Cam, what are your thoughts on the use of innovation such as machine learning and also risk-based testing and oversight?
Good afternoon. Thank you, Dan. I would say with the use of innovation, I think we've come a long way. When we first started out with this many years ago, we were looking at how do we just get monitoring into place. And then once we actually have, it was very detrimental that we understood what we were looking at, where we were going with it. And I would say over the last 5 years, we really have picked up the innovation stick. That being said, we have a lot of good innovators out there. We have great software. We have great technology vendors. And I think from even a regulatory perspective, even with these changes in the regulations, it's really proving to be very forward-thinking, very more open. So it's not very regimented to our financial institutions or other organizations that are doing some type of model risk governance. But they're looking at it from a perspective of, okay, how can we do this better? How can we do it more efficiently? So I think between innovation and how we're managing our risks around these systems, I think it's prevalent that with the regulators coming in and saying, look, you need to be more innovative. We have certain ideas, and while we never, and if someone ever has, please let me know, you rarely get a direct answer back from your regulator that says this is exactly what you have to do and this is how you do it. So with being in a very risk-based environment, we really want to understand what do we have? And I think that we saw several years back with an AML drift where we started losing touch with how our systems were modeled. What were they running? What was the effectiveness of their particular rule sets? Were they generating too much in volume? So I think with that said, over the years, since we started with a dot matrix printer and a green bar report trying to detect structuring, I think we've come a long way. And as we continue to move forward, I think the innovation, the tools, I think the financial institutions, the other organizations such as fintechs and other non-financial institutions really have an opportunity to drive some innovation around this in order to determine what is the best way to do it. Because I think right now our regulators are listening and they're looking and they're trying to learn themselves and they're trying to progress themselves, especially as we enter these new phases of digital currencies and how we transact more online rather than through our normal channels for most banks.
Okay, thank you, Dan. I think you can. Dan, any thoughts on that same topic?
And first of all, again, thank you to the organizers. I'm honored to be here. And as you pointed out, Dan, I've got a long tooth in the industry, so I still stay in touch with a lot of my colleagues at both large and small to mid-sized institutions. And I would tell you, taking a little bit different tack than Cam here, and that is on the community bank, the mid-sized banks, things that come out from the government that say, hey, we want you to engage in more technology, isn't always as easily embraced, especially around, cost or can they do something else. And it wasn't long ago thinking about models and model risk management within the anti-money laundering compliance space. There were a lot of institutions that just didn't do much here. In fact, I still remember the days where we were trying to find, well, what is a model in the AML space? Is it customer scoring? Is it suspicious activity reporting? Is it transaction monitoring? What about third-party wires coming through? Do we need to model those types of things? And so there's a lot of uncertainty when we're asked to get on board with technology. And what I do like about the AML Act and what I do like from looking at what FinCEN and the other regulatory agencies are doing in encouraging technology is that it's kind of in a hold harmless stage where they're asking us to utilize more technology and to manage risk better. But at the same time, they've said, we're not going to criticize you if you find something in using the new technology that wasn't revealed before, or if you end up just saying this is a failure, the technology didn't work, they again will not criticize us. And we all stay very close to our regulators. We all know that. Some things that I see from FinCEN that I hadn't seen in the past are things like, they really are trying to, one of the things that we have to always work through when we're using technology is what does it mean, not only for us, but, we're looking to ferret out an issue or a risk, whether it's money laundering, fraud, counter activities, whatever it might be. We're doing this in the data that we're dealing with all of our mostly great customers, and how do you do that in a way in which you don't compromise privacy and the integrity of their data and so forth. So FinCEN's been pretty good about talking about balancing privacy with financial integrity and making sure that we try to work through that with our technology. Interesting enough, just coming out this year has also been FinCEN asking us if we're using third parties, we should look at third parties who are engaged in low to moderate income areas and helping individuals who are in underserved communities, and certainly with races and so forth, and other things like persons with disability, et cetera, which I applaud FinCEN for doing. It's important for all of us to continue to think down that line. But in the end, though, in looking at this act in particular, it'll be interesting to see how much more technology we want to put into our models and what the output's going to be. And I know as we go through this discussion here, we'll talk about some of the risks and what it means is trying to counter those risks with better and better model risk management.
Okay. Thank you, Dan. Let's move forward. There will be some additional components of FinCEN's rule which includes standards for a risk governance framework for financial institutions to provide oversight and evaluate and monitor systems and testing processes, both pre and post implementation. And so I'm wondering, Cam, if you have anything to share on that topic.
I have quite a bit I probably could share on that topic, but we have a very limited amount of time. So I'll say for the specific standards, when they're talking about the risk governance framework in itself, with these standards, they're talking about putting in place, being a risk-based approach, obviously, because I think that's all we've ever been doing is trying to identify our risks around our models we do have set up, our business operations and how we monitor, detect, and also report. But we're looking at where they're coming in now and saying, okay, look, we've got to have and we're talking about pre and post implementations where we honestly never really did that in the past. So, I've been working with multiple clients and talking with a lot of my colleagues around how we're doing this today, and especially now in today's environment, more organizations are very much more apt to start talking about, well, let's replace our system, let's enhance our system, let's go with a different vendor. So when you're doing that, there are quite a bit of risks around it just from this perspective of these systems are operating in a different fashion. They use different rules, different criteria, different parameters around these. So it's very important to really understand as you're deploying a new piece of software, you're deploying or replacing the existing piece of software that's doing your monitoring for you. Even if you're going from the point of manual reports and moving into, hey, we're going into a more automated environment, these standards really help try to provide some governance around what is it you need to look at. Are we looking at data integrity? Are we looking at the governance and the overall governance around that particular program? What types of models and rules are you running, and are they commensurate with your risk assessment? So as we're deploying these types of standards, there's certain areas you do need to think about, you need to look at. I encourage you, if you're not aware of some of these areas, please feel free to always ask questions, contact us, contact your peers, see how other people are doing it, because honestly, that's how I gather over the last 26 years, really best practices. How is everyone doing it? But with these particular standards that we're looking at, the whole purpose behind it is if I have one system in place and we're really looking to move to a new system, you know what, our system, we feel like it's going to probably clean up our volumes. And I think that's the first inclination of everyone who wants to move to a new environment, because they think it's going to reduce their volumes. It's almost the contrary. It's very possible it can increase your volumes. So that's an area you need to look at, and that's not bad overall. It could mean that, one, perhaps you're missing items in your previous system or your current system. The new system might be adding new variables to it that's being able to do additional calculations. There might be some different type of risk scoring or risk maintenance around that. So there can be impacts that are unexpected. And that's okay. There's nothing wrong with that, and because we do expect it. The regulators expect it. So what we're looking at today is really around documentation and transparency. I think out of everything coming out of this particular regulation, we're talking about sharing of algorithms and, no more black boxes. How do we really understand what these trends are? And that's not just coming from vendors. It's coming from the regulators themselves. What are they finding? Where are the tips, tricks, and trends that we just are missing out on parts of the information? So if we start establishing these types of standards around our risk governance programs, being able to identify, document, and really understand what do we have today? We're moving to a brand new system. Make sure our documentation is complete, because if we do have an increase in volumes, why? Was it because we were missing something, we weren't using all the data that we had before? Or is it, hey, we had our parameters set incorrectly, we've gone through some testing, we've reset it, now it's working, I think, more as intended than what we had before? Or if we're receiving lower volumes, it works in the same respect. Documentation, transparency. Are we using variables now? And now that we introduce new variables, parameters to this, now we're actually able to lower some of those volumes. And it's a little bit more indicative of the true suspicious nature of some of these we really do want to investigate and report on. So that's kind of my view around some of this, but I think it's actually, as an overall maintenance and program for framework, I think we're getting there, and we're trying to establish some standards around this where, again, back to risk-based, do what's reasonable for your organization.
Absolutely. Thank you, Cam. And Dan, anything to share on that same topic?
Yeah, Cam said a lot of great things there. In looking again at this, and again, as he said, where you're at, and it needs to be customized for your organization. But at the same time, this is not an area that, from an AML space, other than the really, really large institutions, that has had a lot of play from the regulators in giving advice, certainly, and checking to see how appropriate they are working. As we mentioned earlier, this is about quantifying risk and the risk of something happening or that is happening at your institution, or that you've got some players that are higher risk that you need to make sure that you're watching more closely. But when I look at this particular slide and think of risk, I still go back to fundamentals, and this is, it's risk-based, and you're hoping that an outcome, it scares me when somebody like Cam comes in and says, yeah, we could reduce your alerts, but we might also increase your alerts. And this is no different than modeling credit risk. We've got numbers that we end up with allowances around our portfolio, and they have to work, and they get a lot of views from the regulators, and we're seeing more and more of those views starting to take place. But when I think about this and go, okay, who are our modelers and what are they doing to make sure that the data's there, that it does have integrity, and that they're putting the right, I'll use the word on the page here, algorithms, whether they're assumptions, attributes, and documenting what those are and why they chose those particular attributes. And then behind that, then having model risk management from the standpoint of validation and making sure that those individuals are as equally attuned and as smart as your modelers who, again, these folks go around and they beep and they've got to be rebooted every few months. They're just so good at what they do, but the validating team's got to be the same. And when they, there will always be arguments on what is the right attribute, the right assumption, the right algorithms, and it's just a natural tension between those two groups. Both play a big role in looking at your overall modeling process. And behind that, good governance. There's got to be good reporting that comes out of this, and it's got to be understood. That's important, and it's got to be understood not only by those that are using it, like the BSA officer, but certainly management, senior management, and your board of directors all have to understand how this is working, why it's doing what it does, what the output is, and then what are your countermeasures to make sure that output is exactly what it should be and what you're expecting. And related to this, there's a lot of stress testing that goes on. There's a lot of sensitivity analysis, and it's going to evolve. We still see a lot of institutions who are doing their modeling work mostly in a manual process. That isn't what Cam's going to be here talking about. It's about technology, and more institutions are moving to that technology. And it may not be the technology that's suited for this type of work within an institution. It might be technology that you already have in place, and you try to customize it to conduct modeling. The last thing I'm going to talk about on this whole risk-based approach, and that is, please do this in a sandbox. The last thing you want is what Cam just said, and that is suddenly you're producing all of these results and alerts that you need to look at. And, for all of you that are with institutions, and many of you are, we all know that in today's environment, we kind of make that net really big, and what ends up falling through that net and being reported into the government from a suspicious activity standpoint is just a very small fraction of what went into that net. And what you hope with model risk management is that it makes you better at what you're looking at, make it better in making quicker decisions, but doesn't compound the problem of suddenly you just have more alerts that you don't know why they were produced and need to work those alerts because they're now sitting on in your queue or on your desk. So risk-based is great, but at the same time, you've just got to be careful on implementing new standards around model risk management and new technology around it as well.
So Dan, we have a good question, Dan and Cam. I wonder if you guys wouldn't mind answering this. The question is, how is the AML Act and AML model risk management any different than FRB SR 11.7, which is Guidance on Model Risk Management, which is from 2011, and also Standard Change Management? So how does the AML Act and AML model risk management differ from that?
Dan, I'll take that if you don't mind. I'll jump in, but if you have anything to follow up and add to it. But I would say there's probably a few different areas, and while some of this looks very familiar to us, I would say as they're laying this out, some of the different areas are more around, one, using really innovative approaches to be able to really enhance the data analytics and the processes behind it. Because I believe in the past, we've been feeling our way through, we've been trying to do it. We've had very, limited and regimented processes in place in the past where the regulators had an expectation and we were trying to follow it. Now the regulators are kind of coming around to that whole, hey, let's look at innovation. How can it be better? And giving everyone kind of an opportunity to say, look, we're trying something new here. This is what we're going to do. I'd say the other area around that really is more around the core of a pre-model validation and a post-model validation. Again, because in the past, most people weren't willing to rip out a system and put a new one in. So as we get more toward, hey, it's becoming a little bit easier, we've already had the system in place, we've got our data sources, our core systems actively mapped. We're trying to figure out, okay, now how can we enhance our current system? Maybe we're growing. We have mergers and acquisitions. Our revenue is so great, we're actually adding, additional products or services, moving to geographies. You need a more substantial system to help you than the system you've been using. So I think being able to really have a process in place for the pre and post production around all of that is important to note here. And honestly, I think really just around the last bit of that is something we tend to gloss over. But now there's going to be a requirement around trying to provide FinCEN information around what algorithms we are in fact using. Any validation of those configurations that are being used so that they can have a better trend and understand better how different organizations are approaching the detection of suspicious activity and what they're doing with it. So I think that kind of opens up the door a bit more, because instead of it just being your regulator and looking at it, we may say, hey, yeah, hand that off to them, but it's not technically being used by anyone else except for the maybe examiner. It doesn't really get put into a database or some type of network where they can really analyze it at this point. So I think there'll be a more formal fashion of how we transfer this information and data over to FinCEN so they can perform an analysis on it, see the trends coming in from around it, and honestly, at some point in time, potentially in the future, make recommendations around different types of organizations, especially now that we have interactions with fintech, the money services businesses, all these other organizations that we're approaching and coming through, like the broker dealers who are doing monitoring around their specific areas. I think we've got so many new areas entering this field. It's going to be kind of inherent upon us to go in and actually share this information with the regulators, talk with our regulators, and try to move it along to a point where we understand what we're going for and have a common goal by the end of all of this.
Cam, I appreciate that. And I also appreciate the great question on that. I think we just have to move forward a little bit because we're going to run short on time. So I want to move forward. Dan, were you going to say something?
I would say that the Act is really looking at us as institutions and as the regulatory agencies, including FinCEN, is how does model risk management fit into the AML BSA regime? And to answer the question just another way, we still will be viewed to be using the guidance under SR 1107 as the framework to build that. So they're going to be more cohesive going into the future.
Excellent. Okay, let's go on to the next slide. And so for the bankers joining us today, there's quite a bit of information as to what to expect in the proposed rulemaking, which we have outlined on this slide. We've also provided some actions that our bankers to consider in preparation for the proposed rules. I don't know, Kim, if you want to briefly touch a little bit more on what we have here. Cam, maybe you have us on mute.
I apologize. I got caught on that whole mute button thing. That's what you're always warned about 30 times before you hop on these. I went and just did it right there. So I would say that as we're looking at this, we're looking at our current environments. We're learning from what we did 10 years ago. We're looking at what we're doing today. We're looking at what is available to us now and in the future. So I would say that looking at these, when we're doing these assessments, doing this type of risk governance program, actually building something out that helps us maintain. We're not just doing a one and done. We're not just doing an annual, hey, look at this. This is an ongoing effort to kind of look at that end-to-end process. So when we're looking at our existing money laundering monitoring, the technology and the resources around that, we keep maturing every year. So if you look back 10 years, we are light years beyond where we were. We're introducing bots. We're introducing intelligent automation and machine learning around all of this. So again, looking at where the rules are coming from, the new enhancements, what they're requesting, this is where I really think you can work with either third-party vendors. This is where you can look and see what you have in-house, which is usually my first suggestion. Some organizations are larger than others, and honestly, you may have different departments that have some technology they're leveraging, and you may not be aware of it. So I really do, I'm a big believer, so I've worked in the bigger banks and the bigger organizations, but I'm a big believer in if you have the technology there, leverage it. If you start breaking it apart and you end up with 3 pieces of software that do the exact same thing, you're just kind of burning your midnight oil and your resources at that point. So I would say take a good look at yourself, see where you are, where you want to be in 3 to 5 years, and that does, in fact, include where do you want to be as an enterprise organization? Are you looking at more mergers, acquisitions? Are you looking to grow into different geographies? And that's where you really need to have a good roadmap in place. Where do you want to be at certain points? And then again, enterprise approach, what do you have today? Where are you at with those types of resources? So I would say that that's pretty much, honestly, to keep it short, if you think that was just short from everything I just said. But I would say that's kind of where they're coming from at this point. Let's take what we have, leverage what we have, but then also let's explore. Let's explore where we can take it further and make it better.
Excellent. All right, so let's move on because we have our first poll question that we wanted to take a second or two on. So do currency transaction reporting CTR structuring scenarios create a large volume of your suspicious activity SAR alerts and filings? So please let us know yes, no, or if you're not sure. We'll take a second on the poll and we'll show you guys the results, and then we're going to move right along. So hopefully we get at least half of our attendees answering the question. right. So we show that about a little more, 42.9% said no. That's interesting. 37.1% said yes, and then about 20% weren't sure. Thank you for that. We have a couple more polls as we move forward. But let's go ahead on to the next slide. Okay. So the next topic we'd like to discuss is the use of innovative approaches. This will allow organizations to investigate and test new technologies, but any testing must be properly documented and managed. Testing must be accurate, and any findings must be clearly identified. I know, Kim, you have some thoughts on this, but you also wanted to touch on CTRs, auto-filing alerts, and sort of risk versus reward. So I'll turn it over to you first, Cam, but I know you probably had some thoughts on this slide.
Sure. Again, I have like a million thoughts around all of this. But so I think part of it really is I'm surprised to see the feedback on the no part, because I would say over the years, again, back to dot matrix time, CTR really trying to identify structuring scenarios and trying to report on them was probably one of our first scenarios ever written for 1.0 monitoring. So I would say that as we're looking for ways to become more effective. So a couple of years ago, I was actually at a round table with several different regulators, and we were all talking about innovative approaches. So this came out about a year before the AML 2020 did. So we were talking about these different ideas about, okay, how can we as regulators make this better for our banking and our institutions that we go into? And it's interesting because, you don't normally get to have these types of conversations with the regulators, but I would say they were very concerned to try to figure out a better way, an easier way to lighten the load on the organizations having to report. It's not just the CTR itself, it's the suspicious activity monitoring of it. So we started looking at the CTR scenarios, what's generating. Is there a way, because typically I would say through most investigative processes, for any suspicious activity scenario for CTRs, structuring, more specifically, cash structuring, how are we doing those? And typically it is the same thing every time. And it's really just an analyst investigator, because if it met a particular threshold, typically we're already going to say yes. They did $9,800, within the X period of time. We're going to have to file on it because, yes, that looks suspicious. So we end up filing on it. Well, do we need to do that every time it comes through? Because we realize if it meets this parameter, it's probably one of the few scenarios that we're really, while we do need to look at it, we need to keep an eye on it, but do we need to actually look at each and every one of them every time? Or generate some type of report based off of it, because it's wasting my analyst time, it's wasting my investigator time. So we know we have to file a suspicious activity report on that scenario almost every time it fires. So that's where I think we can really refine some of that area, because honestly, we can automate that. We can have that auto-generate everything that we have to collect, the evidence, the supporting documentation. We can even have it generate into the summary fields for the SAR filing itself, and then put it in a nice little neat wrapper for the upload to FinCEN. So why do we need to really look at it over and over again and continuously do some of these manual processes around it? So that was a discussion I'd had with the regulators, but that was probably one of the top areas they were looking at, because back then, again, they were looking at CTR thresholds and whatnot to see if any adjustments could be made. But considering that the most work was coming out of the investigations and people having to actually file on them, for the cash structuring scenarios, that's where we were getting to try to figure out, can that be easier? Can we make that better? And if we can, how do we do that? And that's coming back to, again, innovation. The regulators right now are saying, try it out. See what you can do. If you can find a way of doing this and it works, excellent. Let's see that. Let's see what that looks like. So they're kind of opening the door for us right now, and I think that's a great purview to have from their perspective. I think they're really great to say, hey, you know what? Give it a shot and see what happens. So that's kind of where I'm coming from for the innovative approaches. It's not just the suspicious activity and cash reporting. There's other areas we can do as well. But I think that was probably one area they know so well that they said, yeah, we get a lot of that. So how can we make that better?
Thank you, Cam. Dan, anything to add on that?
I guess, first of all, I'm not surprised by the polling question and answers. First of all, let me just say, Cam, what you're talking about is next generation, and I applaud that and welcome that because we need more of it. But when I look at the results, I'm going in today's environment, and you have businesses that are cash generators and coming into your institutions, you've completely separated out suspicious reporting versus cash reporting. And you've not taken advantage of exemptions because the exemption process is not that easy to monitor. And you're trying to differentiate between a mom and pop as to whether or not it's selling more money orders than selling gas, those types of things. And you end up just saying it's easier to file a CTR. And so you file those CTRs. And whether, the act talked about changing the threshold and so forth, and that may happen, but at the same time, it does not give institutions that have cash generating customers any relief whatsoever, and even the exemption processes that the government's put in place for banks just isn't working. And so you end up saying, okay, what in my suspicious activity reporting monitoring would catch these cash activities? And again, you've separated out the two between just cash reporting and activity reporting. And, with CAM, at one point we were, as institutions and bankers, lobbying to say, why don't you just get rid of cash reporting? But then, we find out from the government that they've said, well, believe it or not, we've actually used banks and other institutions' cash reporting to stop, not to identify, but to stop terrorist-related activities, and have shown us where that has happened and how our CTRs have been useful. So from a law enforcement standpoint, they're not going to back off on any reporting that they feel is useful. And now it's up to us, as Cam said, to figure out what is the right type of monitoring, reporting, and as he said, can you do some of this more on an automated approach? I would also say that, we're also looking at a change in, are we doing things more of a batch process? Are we doing things more real time? And we know that certain parts of our sanctions program have to be real time, but not all of it. And transaction monitoring and reporting does not have to be real time. And but I think those expectations will change, and we're all going to need technology to help us get that done.
Okay. Thank you, Dan. We're going to move on with how all of this contributes to effectiveness. But first, we have another poll question for you. Do you believe model risk management contributes to the effectiveness of your AML program? The answer, yes, somewhat, no, or not sure. We'll give you a couple more seconds to reply. We want to just try to get as many folks as we can. So do you believe model risk management contributes to the effectiveness of your AML program? Yes, somewhat, no, or not sure. All right, we'll give you 5 more seconds. All right, let's take a look. And so, wow, so overwhelmingly we're seeing 60.2% say yes, 27.2 are saying somewhat. A smaller percentage, 6.8, is no, and then a few are just saying they're not sure. Okay, so let's move right along, if we wouldn't mind. So really what we're trying to do at this point is look at, do we believe that model risk management contributes to the effectiveness of the AML program, and what are the objectives of our program, right? So to predict SAR-worthy losses and sanctions violations. Is it more of a guidepost to managing end-to-end risk, right? So, Kim, I don't know if you have any thoughts on this slide, but the objectives clearly are stated here, and we just want to know what your thoughts would be.
So I feel like I've worked most of my life around analytics and trying to be more predictive. And Dan and I have talked about this probably more times than we can count before. But, I mean, honestly, there's no silver bullet. So especially around the predictive analytics, it's not going to tell you, hey, most likely when you onboard this customer, they're going to be there's some type of suspicious activity you're going to report on. So predictive analytics, I think we're still moving in that direction. I would say if we're talking about, really managing the end-to-end risk and based off, people are actually seeing what the value is clearly from this, because I agree. I think, honestly, AML, model risk management, and the governance around it really has changed our operational environment. I mean, we see that other areas are taking advantage of us cleaning up our data sources. So when we're talking about the data itself, being able to look at what we have, understanding what we have, I have to say before AML came about and we started having to enforce these programs and implement them, I have to say, really before, we didn't know what data we had. And we kind of proved that when we had to go through and really clean up our data. And we're still cleaning up data. It's always going to be an ongoing process. But I think that our data is a critical element. We're talking about, different systems. We're using much more technology than we used to. So system configuration, the algorithms, the validations that we do, all of this requires a solid data element. I mean, a variable to really meet these standards. So from our source extraction and being able to pull it in from these source systems, from a core into the monitoring systems itself, or into your marketing systems, or into your fraud detection system, whatever the case is, it requires ongoing and consistent maintenance and testing around these. And why is that? Because we will make sure that we have the correct data. If we don't have the correct data, then we can't act on it appropriately. And I think that's where having a risk governance framework comes into play in order to make sure that we have that ongoing maintenance, because it doesn't just impact AML. We've really put standards in place that have really carried us far around just risk management itself. So I think we sometimes forget about the impact AML's really had, because honestly, I have to say, before AML, I worked quite a bit of fraud, and having even the data that we have today coming out of it is so beneficial and so helpful for fraud investigations. So I would say that, doing a regular verification, validation of our data, being able to really have a good data management program in place, to have clean, accurate, up-to-date data. I mean, it's a big program. It's not easy to do. And whether you're a small organization or a large organization, you've really got to have a good enterprise level approach to that. Because I really think you really establish some really good benefits around this and the necessity of a data governance program. Really just around more of, we do have different areas using this data. We rely upon the data, and we rely upon it to be correct, because I don't know how many other organizations have gone through this, but when I was working, on the banking side, institutional side, I could tell you I could go into 3 different systems and pull information, and I'd get 3 different answers, and it was the same question. And our regulators found that. It was a fairly large organization I was working for at the time. I went in, provided a report. They went in wherever they went, and they came back, and they apparently hit 2 other systems of ours that had completely different metrics in it and information in it. So, of course, we got dinged. There was a finding, but that was on us. We didn't even know what we had. So coming back to, really, it's critical for your continuity. You've really got to make sure it's ongoing, maintenance is done, the testing is done, and that you're collecting good, clean data and understanding what that data means.
Excellent. Thank you, Ken. Dan, any thoughts on that?
Yeah, we've had tuning programs in place. We give a lot of metrics and data points and guardrails, not only to our management, to our board, but to the regulators. We show this as well. This new effectiveness coming out of model risk management, frankly, can only make us better, because it's a much more disciplined process. It has a lot of chances to touch things that we may not have looked at just looking at it from a human element standpoint. But, when I think back, and especially as you get to the end of all of this, and you're talking to your board of directors, and I don't know how many times, either as a bank examiner or a banker, I've heard the question from bankers, bank boards saying, are we filing enough suspicious activity reports? And the answer is not easy because you're dealing with what your bank is, what your institution does. You may not be as risky as the bank up the street who's filing even more. You don't know that. The regulators know it because they get to compare all of that information. And so while we have been standing on, we believe we put in all of the right traps to make our program effective. Again, it's not perfect. We may file a suspicious activity report on something that ends up not being a nefarious problem. At the same time, we likely miss them. And our job is to identify and report, not to determine that something is unusual or suspicious. But this whole model risk management process puts in a much better discipline with more data integrity that makes our programs overall much better. And I think you saw that through the polling results.
Okay, thank you, Dan. Let's move on. And what we want to talk about next is rulemaking for testing methods and why is it necessary, right? So, testing methods, rulemaking, there's some things where we want to specify standards for testing technology and technology-related processes, managing risk versus solely managing cost. We have some details outlined on this slide, but Cam, I'm curious what your thoughts are on this.
So honestly, I think this kind of encompasses everything that we've been discussing. We're talking about sharing information more so with our regulators than we have before. They're going to be looking at our system configurations. They're going to be looking at what type of algorithms are we using in order to do this more prominently, do it better. And then the validations around those to make sure they're working as intended. And I say that because I think, honestly, we're going to be sharing this across the board. Eventually, as we share this, I'm not going to say it's in the next year or two, but I think in the future, we're going to have some access to understanding, at least from our peer groups, our partners, and understanding really better around what does that mean. If I'm doing a system configuration around this piece of technology or around this product or service in this particular geography, how many other people are doing that? And where can I go ahead and not have to recreate the wheel? How do I get information around that? And then back to the regular verification and validation of data. Data does become stagnant. It does become stale. And that's part of the point of having a customer due diligence, enhanced due diligence programs in place as well, just for the fact that, you know what, we've got to understand who our customer is. But if they came in 5 years ago, they may have acquired more services, more, gained more, geography. Maybe they're moving around quite a bit. There's a lot that happens with our customers. And with that being said, there's a lot that we'd like to get more information on. And there's a lot of data sources out there that you can pull in to help complement your current data you have. Not only that, but also to make sure that your current data is in fact current and up to date. So it's really being about more proactive in this stage, because I think with our data, we tend to kind of just sit back and go, okay, we got it, we're good. Well, 3 years later, it's still the same data. Is it still good? I mean, have we updated it properly? I worked with so many organizations where data in the insurance system for the same client is different over in broker-dealer. It's different over in deposit operations. So you're trying to figure out, well, do I really know this customer? Because now I'm sitting here telling you I've got it in 3 different places, and I've got 3 different pieces of information for this customer. So it kind of begs the question, do we actually know who the customer is? Are we doing a proper maintenance of our program and keeping it up to date from that perspective? And honestly, again, take advantage of it. There's benefits. I mean, if we're going to do these data governance programs, this really does help our organization as a whole. It helps each and every institution, every organization, regardless, because I do agree with the poll that was done previously. I think as we continue to develop, and while it may seem resource intensive, I really think the outcome is, very much worth putting that effort into it. So it's very much risk versus reward at this point. Because I think aligning all of this together, your AML programs, your fraud, heck, your marketing, your physical security, all of your other systems, all of your other departments can take advantage of this. And I really feel like, I would say for the most part, I would say most organizations actually do probably have access to all of their information. So it's not just, here's our AML database, no one else can access it. Typically, if you're bringing in the information, I would say that most organizations, and that's not how it started out, but they have started to learn that, hey, there's data here that we can leverage over in fraud. Hey, there's data here we can leverage over in our insurance side. Here's some data we can leverage in X, Y, or Z. I mean, you really can start pulling it apart and looking at it and leverage what you've got. You're taking the time, you're spending the money, and you're putting in the resources and the effort. Take advantage of the benefits it has to offer and use it. Use it to your benefit.
Cam, that's great information. I want to make sure we get to the next topic, which is how do I prepare my FCC program? But before we do that, we do have another poll question. And the poll question is your AML program prepared for new regulations? Yes, somewhat, no, not sure. We'd love to hear if you feel your AML program is prepared for new regulations. Please let us know. We'll give you about 5 more seconds in the interest of time because we want to make sure we cover. There's a couple more items that we feel are really pertinent. So we'll give you just a couple more seconds here, and we will look at the results. Is your AML program prepared for new regulations? So I think about 34.2% are saying yes, 42.5% are saying somewhat, and there's still a small percentage saying no, and some others just really aren't sure, which is fabulous because that's why you're here. You're trying to determine if you are prepared or not. So let's move right along. I want to talk a little bit about sort of preparing your program, right? All like the who, the what, the where, the when, the why, right? System configurations, algorithms, validations, the regular verification and validation of your data, and establishing the benefits and the necessity of data governance, right? There's a whole lot of information here, Cam. So I'm curious what you're thinking about this slide.
Considering we have 8 minutes left, and Dan, I want you to be able to definitely weigh in on this and your thoughts around it. 'Cause you've had really in-depth experience around all of this. So I'll make this one kind of short because I think I touched on most of these topics throughout the entire presentation. But I would say your data is critical to you. Establish the benefits that are necessary for you. Determine and evaluate. Again, is the accurate and information on file accurate? So this is where, again, you can leverage third-party vendor. This is where you need to have maybe a little task force internal to kind of look at this. I mean, there's a lot of different ways depending upon your organization where you want to go with it. But I would say, again, it's coming. This is where we need to get to. So as we're sharing this information, not only, with our regulators, being able to help our peers in this respect to figure out, okay, how can we do this better? And being able to really understand our own data. And I think that's where this has kind of evolved. Before, we didn't honestly probably think about data that much. After we started installing these and implementing these software programs that were meant to determine whether or not, hey, does this look suspicious? Let me investigate that. Let me report on it. We really didn't have a good handle on the data we had. So being able to understand how we should be configuring these systems, what types of algorithms do I need to deploy? What do I need to do around machine learning? How do I use bots? And then understanding, okay, our data, is it good? Is it clean? Is it validated? Is it up to date? And then establishing really how do we use this? What are we using it for? And I think it all interconnects. So if you're looking at it from that enterprise approach and understanding where, again, your roadmap is going, where you want to get to, this information will be very critical to your organization in order to make sure you get there successfully. Because each product you add, each service you add, each geography you move into, that's part of your risk assessment. And that risk assessment is your foundation for building out what do we need to do next in order to understand that risk and be able to deploy the proper monitoring tools, the proper reporting around it, the proper resources around it. So I would say take a look at it from that perspective, and I think that's going to help you drive it home and drive it forward.
Thank you, Ken. Dan, I'm curious what your thoughts are on this same topic.
There's a lot of good information on this page, but it comes down to transparency. The risk of everything we do is owned by our businesses, not by our functions. And yet I don't want some business leader making a decision whether or not a suspicious activity report should be filed or not, or if there's unusual or suspicious activity worthy enough that should we close an account or not. Having said that, the businesses need to understand what we're doing and how we're doing. So this enterprise holistic view is not just for us and the functions. It's got to work for the businesses as well. I don't know, we had a polling questions around data. Data is so critical around this, and it doesn't matter if you're creating a data warehouse or data mart like the one individual is, or you're gathering the information through a different process directly from the source systems. But integrity is going to be important here as well. And don't forget, the business owns the risk.
Absolutely. So a couple things we want to do logistically. We want to just move forward and just say that in the presentation, we've provided some really helpful links that we think will help you guys as you're working through this or as you're trying to just do any research or studying. We've provided some great links that you may find helpful, which are, of course, available in this presentation that you can download after the presentation today.